How's it, guys? Welcome back to another video. Today's lesson will be about one of ICT's simplest entry model, which is the ICT OTE entry model, or the ICT optimal trade entry model, right? Which is built around the Fibonacci tool. So in order for you to use this model effectively, stay till the end of this video as I will post my exact Fibonacci level for precise entry, right? Oh, but before going to the video itself, please subscribe, like, comment, and share this video with your friends and family. And just like always, guys, we're going to go through the theory part first and hop into the chart and look at a few market examples. Right? Let's go to the video. So before going into the theory part of the video, let me put on some few disclaimers and pointers. I only use this model on three assets, which is Nasdaq 100, USD80, and SPX 500, which is S&P 500. Right? I use these three assets because this is only what I trade. I don't trade currencies or cryptocurrencies. This is the only thing that I trade. All of these three things. So, and I also trade the New York session. I trade the New York session only. So, but for the optimal trade entry, I only trade the AM session, not the PM session. When I'm trading the OTE level, I don't use the PM session. I only use the AM session, which is from 8:30 in the morning to 11:30 in the morning, New York time. When you convert it to South African time, it's around 3:30 in the afternoon to 5:30 in the afternoon. And I only use three time frames, which is the 15 minutes time frame for buy side and sell side liquidity, the 5 minutes time frame for entry, and the 1 minute time frame for refinement of my entries. Right. So what do I look for when I trade this model? First thing that I look for is a liquidity sweep. I look for whether the market takes out the buy side or the sell side liquidity, and I choose which one I trade because based on, no, not because, based on the liquidity which was swept, because I don't look at the daily time frame or the hourly time frame for draw on liquidity. I'm going to go to the 15-minute time frame, plot out my buy side liquidity and sell side liquidity. Whichever one is taken first, I'm taking trade into the opposite direction. After the liquidity sweep, I look for market structure shift or a change in the state of delivery. Then whenever that happens, I take out my Fibonacci level, which is my OTE level. I place it from the low to the high, then wait for a retracement into my Fibonacci level, and I get my entries there. So let's look at these charts here. So this line here will represent 8:30 in the morning, 8:30 New York time in the morning. So whatever happens before 8:30 in the morning, I disregard it. Whether there was a break of structure or whatever happened, I don't consider it. What I want is I want to see 8:30 in the morning, then I plot out the first buy side liquidity and the first sell side liquidity, which happened prior to 8:30. Right? After that, after I get this liquidity sweep here, in this example, is we find that our buy side liquidity has been swept. After this buy side liquidity sweep here, that's when we come here. I look for a change in a state of delivery or a market structure shift to the downside by breaking the previous low. When this previous low was broken, we have what is known as a market structure shift or a change in a state of delivery. Then from here, I look for the market to retrace into my OTE level. Then that's where I'm going to take a sell. Right? So that's all I look for. I look for 8:30 in the morning, then I look for the first buy side and first swing low and first swing high before 8:30 in the morning. I plot them as my buy side liquidity or my sell side liquidity respectively. Then I wait for either the buy side or the sell side to be taken. Then I'm going to take trades in the opposite direction. Right? That's the theory part. Now let's go to the market and look at a few examples. Okay, guys. With our first example, we are on the S&P 500 E-mini features on the 15-minute time frame. What do I say? What do we do on the 15 minutes? On the 15 minutes, we are looking for 8:30 opening. We're looking for 8:30 opening, which is here. This is our 8:30. This line represents our 8:30. And from there, we look at the first swing high that we have. We have this swing high and we have this swing high. So they're relatively close, so I chose to use this one. Because if the market is going to go above this swing high, might as well go above this one. So now our swing low is found here. This is our swing low. So what I'm gonna do is I'm gonna name this our sell side liquidity, and this becomes our sell side liquidity, and this becomes our buy side liquidity. So whichever one is patched first, then we look to trade in the opposite direction. So if you see here, you realize that the market went through this low first here. Then when this low here happens, now we go to the lower time frame and look for buy entries. Why? Because sell side liquidity has been patched. So this is supposed to be sell side liquidity because sell side liquidity has been patched, because sell side liquidity has been patched. Now let's go to the 5 minutes and look for our entry. Okay guys, now we are on the 1 minute time frame. What are we doing on the 1 minute time frame? I was supposed to be on the 5 minute time frame to look for interest, but I realized that if I'm using the 15 minutes and the 5 minutes, there's not enough candles that are going to form our OTE level or our proper market structure. So I went straight to the 1 minute time frame for our refinement of the entry. So we have the sell side liquidity which was run here, and when this sell side liquidity was run here, we expect to go bullish, but we do not go bullish until we see a change in the state of delivery or a market structure shift, right? So if you realize the market made this low and the market made a high, then the market made a lower low by breaking this low. But when it was breaking this low, you see this clearly, realize that the market failed to close below this low. So this tells us that this is our liquidity grab. We have another liquidity sweep here. We have another liquidity sweep here. So this is further confirmation that the market is ready to change direction, because if it was supposed to go down, the candle will close below this low to show that the movement has momentum to go down. So now we have the market grabbing the liquidity and closing above the previous low. So we have the market creating this high here. After creating this high, with the market going and closing above this high here. So this is what we want. When the market closes above this high, this is not a liquidity grab, but this is our market structure shift or our breaking structure. When we see this breaking structure and we see the market making this high, you simply take out your Fibonacci level, put it on this low, and put it on this high, this low and on this high. So your Fibonacci level will be the 0.618, the 0.705, and the 0.79. So this 0.075, that's our 50% of our OTE level, right? So what you do is either at the 50% here at the 0.0705, you take your position there, and your first target should be here. Your first target should be here. But because you are also trading and you hide your stop loss below this protected low, but because you're also trading structure, you must combine ICT concept together. Your first target, I suggest your first target to be above this high here. This becomes your first target. So whenever the market comes above this high here, you take your partials and you move your stop loss below this low, which means now your trade is secure. Your trade is risk free. So what you do is you are going to keep on scaling not scaling, trailing your stop loss up until your higher time frame bias is met, because the actual trade target will be here, because this is our buy side liquidity and that's where we expect the market to go. So if you can go to the left here, this is when the market came at this low here, but it took 2 days for the market to come here. So if you are not going to hold for this long, you can simply wait for the market to come below above this high and take your first partial, and come above this high and take your second partial and move your stop loss maybe from here or to here or to here, and you'll be stopped out by this candle, right? Okay guys, one thing that I have to tell you about this entry strategy is that it's very easy to stack your entries on top of one another, right? So now we realize that on the first example we have this break of structure, which means that we have this leg and this leg, which makes our leg to search for our OTE entry. Now when we have this break of structure to the upside again, we have this break of structure to the upside again, we look to the low, which is here, and we put our fib here and our from here to here. And now what do we do again? You take out your buy position again and you put it at the 50% here, and you target even higher. So this becomes you target even higher. So where do you put your stop loss? You can put your stop loss below this low here. So you can keep on doing this until you see structure change to the opposite direction, right? So that's all from me today, guys. Please hit that subscribe button, comment, like, share. Give me future ideas on what to create on this channel, guys. Everything that I'm doing here is for you. So give me ideas on what to do, suggest such future videos, collaborations, or whatever you want to do. I'm willing to do it. But don't forget to subscribe. See you till we meet again. Peace out.